It's a great point. We talked about yesterday how the analyst expectations are so high for these stocks that even coming in line might not be enough. And I think that's a bit of what we're seeing here today. It is important to look at that overall picture for both of these companies. Huge growth in sales year over year for both, as you mentioned, Steve. And the other thing to look at here is that even though Amazon did guide lower, it doesn't give a very clear reason as to why. It says the fourth quarter is the most important quarter. That's because it's when holiday sales come in. Generally, analysts looking very, very closely at that number. But Amazon said it's just looking because there are a couple of reasons. One is that wages could be affected by its decision to raise wages to $15 an hour. Another could be some discrepancies in Prime subscriptions. So it's important to say that earnings beat here. The reason that the shares are down is because of that revenue guidance miss, though, and that's what we're seeing in that stock.
But the fourth quarter, as you mentioned, is going to be extraordinary for all online players as well. Online is still growing somewhere in the low 20s still, percentage increase year on year. Bricks and mortar are going to be fighting for their life around the world this holiday season as well. And Amazon, and I'm sure it was Courtney Reagan around about 11 months ago who had this report in our US channel saying that 75% of US consumers, or something crazy like that, were going on Amazon to check out their online purchase as well.
Half of all online sales in the US are done on Amazon.
Well, I think the figure was even bigger around the holiday season from Courtney last year as well. So what I'm saying is there so much baked into the valuation? This goes back to where we come back. Is there so much baked into the valuation that analysts can say, we think this company is worth 60 times, 70 times, and 80 times, and this is where we still have problems, isn't it, really?
It is. And a couple of analysts last night were calling for reason, saying, okay, maybe it's time we reassess this. But when I looked at the price targets this morning, one upgrade so far today, and that was saying, look, there's still good margins on this business. We think there's room to grow.
Can we talk about Google a bit as well? Because then again, similar phenomenon. They're still citing growth in advertising business, but a little bit slower than expectations. And yet we're seeing these dramatic moves in after hours trading. I mean, what is the issue there? Again, is it just a matter of expectations are so high, it's been impossible to beat them because the bar is too high?
That's right. So Google ad sales growth did slow, but as we've talked about, it's continuing to grow. A lot of chatter that the slowing sales as growth from Google is actually being taken by Amazon. So an interesting story here about how the two companies do relate, and that's partially because Amazon is getting a lot more traffic when it comes to search. So the Alphabet story also is one of CapEx. They really did increase business investment last quarter, and that's something that could be seen as a positive as well as a negative maybe in the near term.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.